Three separate companies from three completely different sectors of global finance made three separate announcements this week, and none of them were coordinating with each other. Charles Schwab, managing $12.6 trillion in client assets, placed XRP futures inside the platform 16,000 financial advisors use every day. CME Group, the exchange that clears $1 quadrillion in derivatives annually, named Ripple Prime as its day one clearing and financing partner for its new 24/7 crypto futures market. And Mastercard, which processes transactions for billions of cardholders across every country on Earth, wrote RLUSD and the XRP ledger directly into its global settlement architecture. Three different problems, three different companies, three paths arriving at the same infrastructure. Today we break down exactly what each announcement means and why the convergence happening right now is unlike anything we have seen before. This is XRP Verified. Let us get into it. Let us start with Charles Schwab, because most people are underestimating the significance of what just happened. Schwab manages $12.6 trillion in client assets. It has 16,000 financial advisors across the United States. These are not day traders or crypto enthusiasts. These are credentialed professionals, the people that millions of Americans turn to when deciding how to protect what they spent their careers building. Retirement accounts, IRAs, long-term brokerage portfolios, estate planning. Schwab is one of the most conservative, regulatory-compliant brokerage institutions in American finance. They do not move fast. They do not take chances with other people's savings. And they just placed XRP futures on Think or Swim, Schwab's flagship active trading platform, available 24 hours a day, 7 days a week. Bitcoin and Ethereum were already available on this platform. Solana was added to that select group. XRP has now joined them. Think about what this changes in practice. Before this week, a client with a serious portfolio reaches out to their Schwab advisor and asks about XRP exposure. The advisor, even if personally informed, has no regulated instrument to point to. No product that lives inside the compliance framework they operate under. No structured answer. That conversation had nowhere to go. Now it does. The product sits inside the same Think or Swim interface the advisor opens every morning. The conversation that previously had no legitimate answer now has a regulated one backed by one of the most trusted names in American finance. And Schwab also serves a large number of independent registered investment advisors, professionals who run their own client practices but use Schwab as their primary custodian. When you include those independent RIA firms, the number of financial professionals who now have a legitimate regulated XRP instrument extends meaningfully beyond 16,000. The institutional reach of this announcement is broader than the headline number. Now let us talk about CME, because this operates at an entirely different layer and most coverage is missing the full significance. CME Group clears more than $1 quadrillion in notional value every year. 1 quadrillion is 1,000 trillion. Every major bank, every hedge fund, every institutional asset manager routes some portion of its activity through CME. It is the central clearing infrastructure behind the global derivatives market, the mechanism that guarantees trades and ensures that when two parties agree to a transaction, that transaction actually settles. Without a clearing partner, no trade completes. Clearing is what makes every other financial function possible. It is the structural foundation that is invisible to most market participants, but absolutely essential to everything that happens above it. CME just launched 24/7 crypto futures and options trading, and Ripple Prime, through the Hidden Road acquisition, is named as the day one clearing and financing partner for this always-on market. Day one, not a pilot, not a phase 2 consideration. The day the market opened, Ripple Prime was the clearing infrastructure. Institutions that have been routing derivatives through CME for decades across interest rates, equity options, and commodity futures can now use Ripple's infrastructure and credit facilities to trade cryptocurrency continuously, including on weekends and holidays. The exchange that processes $1 quadrillion in derivatives every year has embedded Ripple at the core of its cryptocurrency operations. Schwab opened the retail access point. CME embedded Ripple at the institutional clearing layer. Then came the announcement that connects both of those to the actual movement of money. Mastercard announced on June 3rd that it is expanding its settlement capabilities to include stablecoin-based intraday, weekend, and holiday settlement. To understand why this matters, you need to understand the problem it solves. When a Mastercard transaction is completed anywhere in the world, the settlement process does not happen instantly. There is a multi-step window involving the issuing bank, the acquiring bank, and Mastercard in the middle. That window follows traditional banking hours, Monday through Friday within standard business hours, not on weekends, not on holidays. For individual consumers, this gap is invisible. You tap your card and the money appears to move. But for businesses managing treasury operations, high-volume payouts, or cross-border payment flows, those settlement windows create real operational costs. Money that has been authorized but has not yet arrived. Multiplied across billions of transactions, that gap represents a systemic constraint embedded into the global payment architecture. Stablecoin settlement closes that gap structurally. Stablecoins move 24 hours a day, 7 days a week on blockchain infrastructure. Settlement does not wait for a bank to open or a holiday to end. It finalizes in real time, on any day, at any hour. And Mastercard named the specific stablecoins it will support: USDC, Paxos-issued products, PayPal's PYUSD, and Ripple's RLUSD. It also named the specific networks, including the XRP ledger. For RLUSD to appear alongside Circle and PayPal in a Mastercard settlement announcement, and for the XRP ledger to be named as one of Mastercard's supported settlement networks, is not a peripheral development. This is an architectural commitment from one of the two largest payment networks in the world. Mastercard stated this is Phase 1. Expansion continues through 2026, with additional partnerships and geographic reach to follow. And then there is the detail that most coverage mentioned once and moved past: the name of the first U.S. institution to go live on Mastercard's new settlement network: Cross River Bank. That name matters enormously. Ripple has been partnered with Cross River Bank since 2014. Over a decade, that partnership has operated primarily along U.S. to Euro payment corridors. Not flashy, not widely discussed publicly, but real functional infrastructure running continuously for years. And now, Cross River Bank appears in a Mastercard press release as one of the first U.S. institutions activating on stablecoin settlement rails that explicitly name RLUSD and the XRP ledger. A bank that has been running Ripple infrastructure for over a decade is among the first to go live on Mastercard's new settlement network. The foundation was poured in 2014. The public confirmation arrived in 2025. The expansion continues through 2026. What you are looking at with Cross River, Ripple, and Mastercard is not something that happened recently. It is a decade of quiet infrastructure work becoming publicly visible in a single announcement. Let me bring all of this together clearly. Charles Schwab placed XRP futures inside the daily toolkit of 16,000 financial advisors managing $12.6 trillion in client assets, creating the regulated retail access point that previously did not exist. CME named Ripple Prime as day one clearing partner for its 24/7 crypto derivatives market, embedding Ripple at the structural foundation of institutional cryptocurrency trading. Mastercard wrote RLUSD and the XRP ledger into its global settlement architecture and named Cross River Bank, a Ripple partner since 2014, as one of the first U.S. institutions to go live. Grayscale projects 5 to 6% of circulating XRP supply absorbed by ETF structures as monthly inflows accelerate from 81 to 131 million tokens. 3 separate companies, 3 separate problems, 3 separate paths arriving at the same infrastructure. That is what genuine institutional convergence looks like, and the Clarity Act has not passed yet. Stay informed, stay patient, Stay positioned. Subscribe to XRP Verified. I will see you in the next one.